You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
Welcome back to our interview series down here at the 2025 Options Industry Conference in beautiful, scenic, and sunny Palm Beach, Florida. Next up in the Southern studio is a returning guest, even though we only get to chat with him about once a year here at this conference. He is Steve Quirk, the Chief Brokerage Officer over there at Robinhood. Steve, welcome back to the Options Insider Radio Network.
Thanks for having me again. It's always good to see you, and we usually get to see each other in beautiful places, so It doesn't hurt.
There are worse things. I mean, usually it's in a room in those beautiful places. We don't get to sit outside at the beach. Maybe that'll be our next series. Instead of the Southern studio, it'll be the Southern beachside cabana, and it might be a little hard from an audio perspective, but we can make it work.
We'll have to put up with a little bit of wind. We'll
edit out the waves and the seagulls, and it'll add a nice little bit of ambiance. But obviously, we're here at OIC 2025. What brings you through the door? What's bringing you down to OIC this year? What are the hot things, the hot topics, or maybe you want to press the flesh and chat with folks like me? What's bringing you down here this year?
I think there's a few hot topics. Obviously, the NASDAQ proposal is one, and then just generally keeping up with all the latest trends. I mean, look, option volumes have been insane lately. I mean, really strong and growing across the board. So particularly at Robinhood, we've seen some records, in terms of monthly option trading. And this volatility, of course, has everybody's attention, and the market moves that you and I were talking about a little bit before we came on are something that I think some people are finding options a useful tool to help navigate.
Let's start there, because obviously the perspective for people, right or wrong, is that the Robinhood clientele are more introductory, more basic to the world of options. We're all living through some pretty wild markets. Even if you've been a seasoned professional in the business for 50 years, I don't care. No one's seen these moves and the vol and the smattering of a global trade war on top. That has never happened in the lifespan of options. So these are all unprecedented waters, even for the seasoned pros. We've been breaking down some of the numbers. Like you said, April, just a blockbuster, up about 25% year over year, volume-wise. So just astronomical numbers on top of a already ridiculous growth trajectory. So what have you been seeing over there in Robinhood in light of these just extreme intraday and whipsaw markets we've been seeing lately?
Yeah, so as you said, our customers are younger than, obviously a history with other brokerage firms where the average age of the customer is much older. Average age at Robinhood is like early 30s. And half of them, there's 26 million almost, half of them are first-time brokerage customers. But a lot of them have lived through COVID. And
it has been a wild 5 years. That's true. Yeah. They've had a pretty rough introduction.
I'm not saying that this is this is more difficult to navigate than COVID, and that's saying something. But the things that we've seen are what you'd expect. An increase in the number of puts over calls that are traded because people are wanting protection. But there's also been this, and by the way, this happens across the industry, but it happens at Robinhood as well. So as much as there's differences between people who've navigated markets like this before and people who haven't, there are similarities. And some of the similarities are when things get really volatile, you'll see customers gravitate toward the broad-based ETFs as opposed to individual names. And the rationale is, look, if the market moves down 20% in a short period of time, they have more confidence that the overall market will rebound to a certain extent than they would on any individual name. And it's, it basically brings diversification into the equation, which, helps. Like no one event is going to, crater their strategy if they're in the S&P 500 or QQQ.
I like it. Forced diversification, like diversification at gunpoint. You're like, oh, at least at the end of the day, the S&P 500 probably going to be here in 10 years.
Yes. QQQ probably going to be
probably.
Here. Yeah. So, and that happens kind of you can see it across the industry, like the volume, percentage of volumes goes up, both in the equity and the option side on the broad-based ETFs. And, now when we've pretty much rallied back almost all of everything since April 2nd. And now you see kind of return to the individual name. So that's probably the starkest thing that we've seen. In terms of overall customer behavior, we have customers who relish volatility and look for it. And they use it as an opportunity to make trading and investing decisions. And then we have people that are just traditional buy and hold. And they, since they are in their early 30s, they all understand that they'll be investing for 30 years. So, sure, are they going to take some bumps? Yeah. But, when you look at history, they all understand, power of compounding, what average returns have been if you go back to 1950. So, they're just kind of time tested and say, I'm going to persevere.
I think it is a good point, too, as you point out, these last 5 years post-COVID have been a little different. You've obviously seen a huge influx of clients. We've seen a huge influx of listeners post-COVID. And if you're coming into the options world right around COVID time, you've seen a lot of crazy things already in your short 5-year lifespan in the world of options. So maybe we should adjust that frame of reference, because I'm hard pressed to think off the top of my head of a wilder 5-year period to dive in and say, okay, I'm going to start trading options. Yet clearly folks are. You mentioned kind of the 0-day stuff. That's obviously a hot button issue these days. First off, and obviously there's a lot of overlap between the Robinhood clientele and the 0-day clientele. The two Venn diagrams overlap quite a bit. Is that still the case? Is there still a lot of interest in 0-day these days over there at Robinhood, or has this intraday vol, has that maybe spooked them a little bit? What are you seeing on the 0-day front at Robinhood?
No, the 0-day we've seen the same growth that you'd see in the industry, same interest. And I think what's misunderstood, because there's so many conversations about 0-day, and some people will write, "Oh my gosh, exchange put these out. That's why people are trading these." Like the behavior of customers is driving what's happening. It's not that an exchange put out a product and now they're being popular. The exchange is catering.
The exchanges wish they had that power, right?
Yeah, they're catering to customers. So I think what gets missed is the duration of people's investments and trades has shrunk across the board. It's not just options, it's stocks, it's crypto, it's ticket, futures, anything, any instrument. And some of that actually should happen because we're not in 1970. You can't buy a stock and hold it for 150 years. Like some of these stocks are up and down in 10 years. They're in the market, they're out of the market. And so people have to be more attuned to their portfolios and look, things happen quick. Look at AI. Suddenly, boom, here's something that, everybody is enamored with. And that came up super fast and it's moving really fast. So I think having a shorter duration, that's not to say you can't have a stable portfolio, a core portfolio, which a lot of customers do. But then they have, some portion of that portfolio where they take a percentage of that and they're like, I'm going to use that and allocate it toward whatever I think is moving quickly.
Speaking of 0-day, did you get a chance to see Henry Schwartz's chart yesterday?
I love
that one chart is like the one thing everyone has been talking about all for the last 24 hours at the conference. He's always got some good nuggets of data in his back pocket. And he said he snuck this one in right at the last minute, didn't even get approval for it. And it was going back from the launch of 0-day SPX. It was the execution times and how much volume go up on average per minute pretty much during the day. And it was, your expected spikes at the beginning and end of the day. That's kind of expected. But what was kind of fascinating, and he pointed out too, is you could see all the bots kicking in and how they're all programmed, because literally like clockwork, every half an hour, there's a spike. at 12 p.m. and 12:30 and then 1 p.m. right on the dot. Big spikes of execution. It's like everyone just programmed their bots for the same thing. So Henry now just exposed them. So, everyone's going to be at home right now. It's okay, now 12:59 is now our new execution. But it was fascinating to see still how programmatic a lot of that stuff is. And so that was, I think he'll be on here tomorrow. I'm sure I'll get him to share that chart. I tweeted it out. I'm not sure if I was supposed to, but it was fat. A lot of people are already responding to that. So just seeing it broken out in such stark imagery like that, it was kind of fascinating to see still how programmatic a lot of that intraday trading is.
It's an important point because I started my career on the other side, not on the retail side. I started my career on the market making side, on trading floors, and then offices. And so, like when we build things, you have to have an understanding. Like, I'll give you examples. There were, in the past, 10 years ago, there used to be things like, I think they're called walking limit orders, but they were basically very predictable orders. They would hit the market in a very predictable timeline. And that's not good for a retail customer when they
can see you coming
on the other side understand exactly when your market's hitting the order. Like, so you have to randomize those things, and I guarantee you there's going to be changes after people see what he just illustrated. But I think that's an important part, like, because I feel like there's so much talk by retail customers and educators and in financial media about what you're going to trade, but there isn't as much talk about how you trade it. And the how you trade it, if you're a person who trades frequently, is really important. It can change your returns significantly.
Well, the other hot thing in the conference, outside of Henry's chart, is something you just brought up earlier, the NASDAQ proposal for a 0-day. We've been talking 0-day at this conference ever since they launched a few years ago. It seems like an eternity. It's only been about 3 years. Every time we come down to this conference, we ask our listeners, what do you want us to talk about? And they want to talk about all the Sanders stuff, but a lot of them still want to know, when are we getting the 0-day Teslas and the 0-days NVIDIAs? And the answer was always, maybe, we'll see. It's contra exercises, all these other issues. This is the first year we have a concrete proposal. Maybe you don't like it, maybe you do, but it's something at least. So it's what, Mag 7 plus 1, I guess, right? So Mag 7 plus Broadcom. So I guess the Mag 8 now. So it's an interesting idea. I think it kind of eschews earnings season as well. So it kind of does a little bit of an end run around that obvious area of risk. What are your thoughts on that proposal? Is that the right way to go, or would you have liked to seen something else?
We like to do what our customers want, and customers clearly have an interest. However, the way that we do it is something that we definitely have voiced our concerns over, and the concerns are, the risks to brokerage firms and customers is significant when you have expirations, and particularly with so you could make some simple changes that would probably mitigate some of these risks. Or, for example, cut off the exercise and assignment at 4 p.m., which would really alleviate a lot of risk because, we as brokers and our customers are wearing the risk on a more frequent basis. And I understand, we've removed the earnings component, which is helpful, but that's not the only thing that makes stocks have significant moves. And so, the question has always been, we want to do what's best in the best interest of our customers, and we want to deliver what they want, but we want to do it in a manner that's going to protect them and us. And I'm not sure we're quite there yet.
So would you rather have seen just completely axe the contra exercise, or would you? Well, there was also talk about creating a series of cash settled equity options.
Cash settled solves everything. But I've been marching down that road for a very long time, and it's a big undertaking by
the prospect of two chains doesn't scare you, like you got the cash settled or something else.
Well, it's just a big undertaking for the plumbing, the OCC and others to take on. And I think everybody understands it would mitigate the risk. That's the best way to mitigate all this risk, right? You still have some risk, but it's not the significant pin risk that exists today.
Someone mentioned something yesterday to me, and I thought this might be an interesting way because the pushback on the cash settles, and now we have an entirely new series of options. You have to educate people. Oh, I sold my put on Apple. Why am I not getting stock? They hit the wrong button. And someone said you could make it, you don't have to have two chains. You just hit, when you enter the trade, you choose. You want the cash settle. That might be a little bit of educational lift, but at least it's not like going back to the days of the minis where you have all these different chains and no one knows what the hell any symbol is. And it's just a word salad or acronym salad on the screen. So I guess if they wanted to go that way, that's one way to go about it. But it seems like people are, maybe for whatever reason, the NASDAQ thing, maybe it's not their perfect choice, but it's a choice. And so some people are.
What would be fascinating? And I'm sure Henry can do it, and you're gonna have him. You should ask him. I'm curious what percent of zero DTEs actually settle.
Go all the way through? Yeah.
Because, if it's, my guess is it's low single digits. So it's actually telling you what you should be doing. Yeah, they should be cash settled because people aren't using it. It's kind of like saying, this is an extreme example, but how many people take 40 barrels of oil when they're trading oil futures?
The proverbial truckload of crude on your lawn at the end of the day.
1,000.
It's 1,000. Yeah, now. Yes, I have learned that from our new Futures Rundown show. I've been dragged into the nuances. But
I do know it's Cushing, Oklahoma.
Yeah, there you go. Yes. There we go. And we all learned that it can go negative in some wild times. So
I had a wild encounter in the futures market many, many moons ago. It was like 1993 when that Gulf War was going on, and oil locked limit up, and we were shorted. And it wouldn't, every time it reopened, it just locked. So we're like, oh my God, are we going to have to be driving a rig down to Cushing, Oklahoma and delivering this?
One of the other things we asked our audience about, and they are intrigued about for the conference this year, is the whole prospect of 24-hour trading. Now, you guys have mostly brought equities. We're pretty much already there almost on the equity front. So the next logical question is, well, what about the options? So do you think it's appropriate? Do you want to see options going 24/7? Should they follow the equities? Should there be some other approach, maybe a limited time frame, or should options just stay the way they are now, like just, opening bell to closing bell and no after hours?
I think everything should trade around the clock.
Really?
I don't think there should be any exception. The equity one, we probably have about 1,000 symbols. That's on an ATS. The only way we're going to get options is if we get the reference data, because they have to trade on an exchange, so you need reference data. And I know that there's conversations about that in the industry, but look, crypto futures, there's a whole host of asset classes that trade around the clock. They all should. Why? I don't understand why they should be closed. We all. I think we pretty much saw during COVID, there doesn't need to be human beings standing on a trading floor. I know I used to be on one. Much as I loved it, I don't really think it's necessary for things to trade around the clock.
So the prospect of wild overnight kind of illiquid sessions, that doesn't spook you?
I think if you do it the right way, like that's always been the concern on the overnight session. And we have parameters that we use in order to list securities, but it's also all limit orders. So like, it's not people like day trading at 3 a.m. It's people that come home from work at 7 p.m. They do the research. They say, I would like to buy stock ABC at $10. Would you like to buy it at 3 in the morning or tomorrow when some old man rings a bell? I really don't care after when it gets executed. I just want to buy it at this price. So it makes total sense. And I think the liquidity concerns, like there is enough flow now, we watch it diligently, that those markets are almost as tight as they are in the day.
We had a good friend of the network and a longtime options educator, Alex Jacobson. I'm not sure if you knew him. Mm-hmm. He passed away over the weekend. And so kind of in his spirit, in his memory, we're kind of asking everyone their thoughts about the overall state of options education, what we could do better. And also, obviously, you guys at Robinhood, you're putting up a good share of the pie now. What do you think you guys overall can do to maybe lift the tide of options education?
I think it's important that we continue to push on that because there's a great amount of options education out there. But I also think that it could be done, we could even do better because there's so many people that are coming into it. The problem with options education is too often you hear the story of people that say, well, I started trading them and it didn't go well. And then I got down to educating myself and now I'm generating great monthly income. So the question is, how do we get them that education earlier so that they don't have to take the hit? You know what I mean? And like what I love to hear is, from our customers when they say, I have figured this out. So I'm telling my friends and my family, don't start just doing this. Let me show you what you need to read, what you need to understand in order to do this in a sustainable manner. That's cool. I love that.
A lot of people have said, especially for your clientele, the Robinhood clientele, it's hard to get them to come in and engage with whatever you want to do, a 1 hour webinar or sit there and look at your P&L graphs, the old school way of doing education. But there's also the other side, which is you can't really convey much in a 30-second TikTok. Yeah. So there's got to be some happy medium. Where do we find that happy medium? Maybe you hook them with the 30-second super sexy TikTok, and then you bring them in for a little bit of a deeper dive saying, maybe you shouldn't be writing that put right before, this earnings announcement or these 150 handle intraday swings. Or how do we bridge that divide between the TikTok hook them and then the actually getting them in for some education?
Well, I think you and I have lived it because, when I started my career, I was educating people and they were willing to come in on a weekend and spend a day. And today, people just don't have that time or they don't want to commit that much time, which is fine. And they want to learn it in a different format. They want on demand, snippets of information, which is cool. We can do whatever they want to do. The thing that I think is most positive, I'll use this analogy because, obviously Robinhood is, associated with GameStop and AMC and et cetera. And when those names got hot again about a year ago, a little over a year ago, of course, everybody in the media came knocking on the door at Robinhood. Oh my God, are they back? What's happening? Et cetera, et cetera. And we're like, not really. I mean, they did trade them, but not the way that they were traded, back when that was a thing. And the point that we made is 80% of the people who came into the market, and that's the first thing they did, they're still here at Robinhood. Now they have a retirement account. Now they're generating income by writing covered calls. Like they learned. So to me, it's less important how you get into the market. It's just important that you do. And then once you do, that you get, educated in a way that's going to make it sustainable. So to me, we have people that come in through crypto. And they say, "Oh yeah, I started trading crypto. Now I'm interested in creating a portfolio and generating income." And that's amazing. I love it.
And do you guys have educators on staff? So if someone comes in, like you said, through with all those different pathways, and then they decide they do want to do whatever it is, a webinar or something about writing puts, that you guys offer that?
We have educators, but we also have tons and tons of content, and then we partner with people. Because a lot of people will point out who they're learning from. And so we want to accommodate that and make sure that they're getting that education. And then, you have to be a little careful. Not everybody who educates is doing what's in people's best interest. It might be in their best interest. And so we kind of, help people understand that.
There's a reason why we don't have a ton of those guys popping up on the network over the years. But since the last time we chatted, you guys have also made some new additions to the platform. You launched Robinhood Legend. Tell our listeners a little bit about that and what they can do on the options side that maybe they couldn't do before.
Yeah, so we launched like 95% of all the trading and investing that happens on Robinhood was happening on mobile, which, by the way, if you would have told me 10 years ago, 15 years ago, even 5 years ago, that the number 2 option trading firm in the world from a retail standpoint was all being done on a mobile phone, I would have said, no way. The real estate just doesn't lend itself to that. But, technological advances today are crazy. That said, we have a lot of customers that are recently joining Robinhood or ones that have been at Robinhood that are getting to a level of sophistication where they said, I need more real estate. And I want the ability to look at a more comprehensive charting package or technical indicators and an ability to trade more complex strategies, both from an option and equity side. So that's why we built Legend, and it's been doing pretty well. But we're continuing to iterate on it continuously.
So Legend offers all the charting and all the bells and whistles people would expect on the options side, all the hardcore people.
Exactly, all the hardcore. And by the way, I've learned this, and you probably have learned it throughout your career. Everything, no matter what you build, there's something that you don't have. And we accommodate that as quickly as we can. But, this indicator becomes the darling, of the month, and they need it. It's the end all be all for them to make money, and so we deliver.
The platform is never done. I was talking about that with someone yesterday. They're building some platform. They said they're close to done. It's like it's never done.
It's never done. Yeah, it's kind of fun though, because what was really fun about it for me anyway was we got to start with a blank canvas. So I've in my past career. I've been part of companies that were acquired. I've acquired companies. So, the problem with that is you're dealing with all this legacy.
Yeah.
And so, I remember when I first got to TD Ameritrade, 15 trading platforms, 15 through serial acquisitions. So, one of the first things we did was just clean it up to 3. But when you have that legacy debt, you don't get to start from scratch and take advantage of all the advances that have happened with technology. We got to do that. It's super fun. Really cool.
I've obviously talked to a lot of people over the years who've come in extolling the virtues of their platform. I'm still waiting for the day where someone walks in and says, you know what, we've cracked it. This is it. This is the perfect 100% done. Drop the mic. We're good. It's yet to happen. That'd be a brave person, I think, too.
Well, there's also, there are also 2 other things that happened in the last couple of years. The biggest trading firm, TD Ameritrade, got gobbled by Schwab. So there's a forced migration onto technologies that you might not want to be migrated to. They kept things. They kept Thinkorswim and other technologies. But, when you do those migrations, as I said, having been through them, I've been bought and I've bought. We bought Scottrade, we got bought by TD Ameritrade. Thinkorswim did. So when you go through those, it's always messy. It's a little messy. You want to do a clean migration. You want to take care of your customers, but nobody likes to be told that they're going to adopt new technologies since they didn't choose.
Well, Steve, I appreciate you taking some time out of your conference to chat with our listeners a little bit. Before we go, we like to leave our audience wanting more. So if you got something fun up your sleeve, any cool hints or teases that the folks can look to coming down the pike from Robinhood Options, now is the time, sir. The floor is yours.
I would say the one thing that that we've started to talk about, and you'll see more about it, and it kind of relates to a topic that has been part of many of the panels here, is on the AI front and how that can be useful for people on the option side in finding opportunities in trades. And I think we're just scratching the surface of what can be done there. First thing is delivering content, aggregated content when you have a portfolio or a desire to do something. Second iteration of that is, now what do I do with it? What's the optimal option strategy? You give me a couple variables that matter to you, like duration, return, and we can deliver you a couple, no pun intended, options.
The first thing you have to do if you're building an AI is tweak it so that it doesn't trade SPX 0-day on every half an hour like clockwork. At least 29 minutes in, or 101 or something.
Yes.
But on the hour, on the half an hour, that Henry busted that now. So that's no good.
Every 15.
Yes, there we go. Well, Steve, like I said, I appreciate you taking some time out of your day, and we'll look forward to seeing how all this unfolds at Robinhood. Hopefully we'll get a chance to chat between now and the next OIC and see how all this unfolds in the marketplace.
Thank you very much for having me.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.